Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, big day for the bulls. Congrats to the bulls out there. We had the higher open. So in the video yesterday, we went over the pattern where since oil broke 60 for the last 7 trading days, when we have a lower wick, we see a higher open. That's now happened 3 times. When we close at the low of the day, we see a gap down and a lower open. That's happened 2 times. So a very significant bullish day today, which is why we were looking bullish, as things were getting extended. The fear narrative was getting maxed out. And the icing on the cake was CNBC putting out the segment yesterday. What was it titled? End the death of the big tech sector, whatever it was just laughable in terms of just more headlines stoking those fears before a significant bounce. So at the end of the day, we pushed through resistance. We have broken the daily lower highs, but that does not mean we are in an uptrend. SPY still has to prove itself. This is a nice impulse move. It is a nice significant shift in momentum, but we have to see higher lows and higher highs. We have to see follow through. Shorts are covering. Shorts are trapped. There was a lot of pressure put on shorts today, but the question is that going to be enough? So what I need to see is a clear daily higher low and higher high to have confidence in follow through. We have broken one resistance level at 280.04. We're now looking up at 284.20 as the next level, and look at the hourly time frame. We're pretty darn overextended. We did establish a tiny support level at the end of the day, 279.27. But looking at the 15-minute time frame, you can see how brief consolidation was. And what that does is it just keeps the pressure up on the shorts, where anybody that enters bearish either gets stopped out with the continuation move or has to buy at the ask, or pretty much has to buy at the ask to get stopped out. And bulls just ran over anybody looking bearish at the end of the day, or at all day, essentially. So if we lose, we can assume that the next time we consolidate on the hourly, we will establish a clear support. And again, that level isn't really a clear hourly base of consolidation. So as far as I'm concerned, I can say SPY didn't really consolidate on the hourly today. So when we do top out and form an hourly higher low, then the question is, can the bulls keep the hourly uptrend? The longer we keep the hourly uptrend, the better. The bulls want to create as much space as possible above our 273.09 support, because the more space we have, the more likely that we can form that higher low and higher high. Keep in mind the exponential resistance on the daily has been containing the price. This is the 12 and 26 period, and we are currently right at those levels as well. For me personally, being all cash now, as I exited my Tesla position into that strength and exited, I actually do have a CGC position, but my game plan heading into tomorrow, being mostly cash, would be I would love to see a gap up open, because if there's a gap up open, that tells me very clearly I'm looking bearish. And if I don't see a clear setup with a good risk to reward for a day trade on a bearish entry, then I don't trade. But I love when I get setups each morning that give me one very clear direction to be looking at, and you just have to be firm and say, all right, if this is what I'm looking for, this is the direction, and if I don't get it, no harm just sitting out the day and go get them tomorrow. So that's what I'm looking for. I'd love to see as significant a gap up and get as overextended as possible, knowing that we need that hourly higher low. And the more extended we get to the upside, the more significant that hourly consolidation will likely be. IWM held on yesterday and leading the way today. I shouldn't say leading. There were so many strong names today. But following through, 149.58 broke. We're now looking up at 150.165. And of course, just like everybody else, we need a clear daily higher low and higher high to confirm we're changing the trend. Sure, this is a great bounce, but we must have that follow through associated with it in order to be meaningful. QQQ. So after getting crashed yesterday, QQQ with a complete 180 turnaround and a close at the high of the day. Imagine that. High of the day, 177.27. It's almost like listening to the talking heads on CNBC is not beneficial. So we've got 177.27 resistance. We have hourly time frame overextended as we didn't establish support on the way up. RSI levels pretty much went from oversold right at overbought, just like that. So when we consolidate on anybody that did not consolidate on the hourly today, when we consolidate tomorrow, we know that we're very likely to form hourly higher lows. How we move from there is going to be very key. We either lose the hourly uptrends and our daily tops of these bounces have been set, or we keep them and we get follow through for multiple days. XLF, also a buoy of the market yesterday, keeping up SPY in the face of tech sector weakness, breaking all kinds of resistance levels. Gap to fill was 26.95. That ended up just barely not filling, 3 pennies left to go. But we took out multiple resistance levels. Look at this double top of 27.21. That level not breaking was a red flag before the oil dump. And here we are heading back up towards that resistance. Look at the weekly time frame for XLF. It's an uptrend. We're looking for a weekly equilibrium. Low, high of the bull move, higher low certainly looks set. And we'll watch for a lower high compared to 28.14 in the next week or two, and for this weekly time frame to tighten up into July. That's what I'm watching for. XLV. XLV is now the most important thing that I'm watching in this market. Well, there's two things. One, oil isn't bouncing. Oil has to bounce for me to have confidence in this S&P 500 bounce. So can oil bounce on the daily time frame and ideally change the daily trend with the S&P 500 bulls? And number two, how is this XLV pattern going to break? Why do I care about the healthcare sector? It's the number 2 largest holding in SPY. And we've got this equilibrium on the 2-day time frame for clarity. We've been charting this one for over a month at this point. And we have the triple bottom. Anything under 90.18 is a lower high. What I foresee happening as a most likely scenario, again, I'm not going to be betting money on it, but take it one day at a time. Most likely scenario is we form a lower high compared to 90.18. We consolidate for a higher low. While XLV is consolidating for that higher low, SPY is going to be consolidating for its daily higher low. And then if we get the bull break of this pattern, we'll look for SPY to confirm the daily trend change. And if we get a bear break of this pattern, we are not going to believe this S&P 500 bounce, and it's going to be a red flag for bulls because of how clear this pattern is. So XLV and oil, very key for the next week or so. Biotech sector, nice follow through. 83.77 is the resistance. Anything under that's just a lower high, but the bulls have created a lot of space where they can form a higher low and higher high, which they will have to do to change the trend. Again, no hourly support established today. Have to go to the 15-minute time frame to find those support levels, and we'll be watching for hourly consolidation tomorrow. It's just a question of whether that consolidation happens in extended hours or whether we get a gap up open and then that consolidation. VIX pulling back. We were watching the weekly equilibrium setup. Certainly looks more likely at this point. High, low of the pullback. We'll say our lower high is set now at 1980, and we're looking for a higher low compared to 1440. Here it is on the daily. Low, high, higher low, lower high, scouting a higher low compared to 1440. If VIX were to drop down into the 15s in the next day or two, I would be looking for a potential entry, anticipating that SPY will pull back on the daily and that we will see VIX, at least initially, hold that 1440 level. So here's oil doing nothing. Oil is still at an RSI of 23 on the daily. So there's two things that we can take away from this. Number one, cautious for the S&P 500 bounce, because oil is not proving it, and oil and the S&P 500 have been hand in hand for the last 6-8 months, on all the way down in December, all the way back up from that bounce, and now back down again, hand in hand, but we're not hand in hand today. So the question is, can the oil bounce get going tomorrow on the inventory report at 10:30 a.m. Eastern? If it does, that's extra fuel for the SPY bulls. They're in great position. They got where they've gotten right now with no help from the oil bulls. And if oil can turn things around and get this daily oversold bounce going and make its way up towards 55, that can be some extra fuel for the S&P 500 bulls to continue their bounce. If, however, this bounce does not get started and it's a bearish reaction to the inventory report and we break 52.11, our current bottom, we have to be very cautious. Because again, all you need to do is overlay the weekly chart. We got oil up right now, and we're going to compare SPY in the background. And we'll make a candlestick so it's clear to compare. And when you have a correlation like that, it's certainly important to be paying attention to. And look at the weekly candlestick, big and green on SPY. Weekly candlestick on oil, not there. Definitely need to see oil participate. And if you really zoom in here, look at since the December low, how correlated we have been. Not today. Natural gas, double bottom down at 2374. Again, watching that falling wedge pattern that I've drawn multiple times on this weekly pattern. But I'm much more confident playing a falling wedge when I know there's a longer term uptrend behind me at my back. And here we certainly don't have that. So with a lack of support and a clear lower high, lower low pattern on the weekly, yes, I'll be paying attention to this pattern, but no, I am not going to be actively scouting a position because it's not the ideal setup and there's a lot of other opportunity out there. And any bounce on natural gas, we're just going to be looking for a daily lower high because anything under 2632 is just a daily lower high. Need a daily trend change is step number one for any kind of significant bounce to try and get follow through. So bottom line, congrats to the bulls. We were looking at Tesla. I think I mentioned in the video yesterday, Tesla, CGC, and NVDA. And it was just as good a day as you could hope for any of those names looking to bounce. Shorts were very high. Fear was absolutely maxed out. And you get that 180 turnaround. We've seen it time and time again. And the more you trade and the more you're familiar with markets and the more years you put in, you're going to see it coming as well. So tomorrow we'll be watching for some healthy hourly consolidation. How we start the morning is going to dictate what I'm looking for. If we get healthy hourly consolidation in extended hours, then we'll see if we can get continuation tomorrow. If we get a gap up open tomorrow, I am looking bearish for day trades. I appreciate you watching. We'll check back in as always. Do good things. No end of the day video. Too much going on. Crypto's dumping. There's that inverse correlation with crypto and markets we're going to have to keep an eye on. But Bitcoin lost the daily uptrend yesterday. Markets, and actually yesterday during the second half of the day. And markets today significantly bouncing. So continuing to watch that correlation. But other than that, there's a lot going on. It's busy out there. We'll see you tomorrow.